Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Okay, and that's always been my approach for using options. All right, so what are the moving averages I have here? Number one, we talked about that moving average for determining the direction of the market. Right now, the YUK, you can see here, I've got in a downward market cycle, as the three lines of what I call the wave are pointing downward. Okay, those are the 34-period exponential moving averages on the high, the close, and the low. Now, the other lines I've got here are what I call my lazy days lines. Lazy days lines are basically more exponential moving averages. And one of the problems that I was facing as a teacher, you not only have to use the things that you're comfortable with and successful with in your own trading, but you have to find a way to communicate them in a way that you know that someone with maybe not as much experience or training will be able to use and benefit from as quickly as possible, right? That's my goal, get you up and running with confidence as quickly as possible and making sound decisions, because an easy-to-use indicator isn't necessarily effective unless you know how to use it right, and unless I know from testing that you'll be able to get beneficial decision levels from them. So what I did is I tested Fibonacci-based exponential moving averages. So you see on the left-hand side of my screen the 55, the 89, the 144, the 233. Anyone not versed in Fibonacci would go, wow, those are some strange settings for moving averages, but anyone who is a Fibonacci fan will recognize all but the 200-period simple, which is a psychological moving average. That's probably the most followed moving average in any market on Earth. The other moving averages, 55 through 5097, those are all Fibonacci-based moving averages. And what I do with those, realizing that chart patterns, support, resistance, uptrend lines, downtrend lines, while all very effective, are all quite subjective. And it's that subjectivity that can account for differences between, say, your analysis and mine. And because the analysis could be slightly different, you now have very different decision levels. So if your uptrend line varies in steepness than mine, or you keyed in on a different support or resistance level than I did, we have completely different analysis, right? We might be using the same tools, but our decision levels become completely different. And why is this important? Because if we're looking for strike prices based upon support and resistance, and these are subjective levels, I might be saying, wow, I positioned myself at a resistance level in the YUK, but we might have a completely different resistance level. What the lazy days lines do with Fibonacci-based moving averages, and the only way you'll see how powerful these are is if you just lay them on your chart. You don't have to lay them on all your charts, but just maybe put one off in a corner, as I have done for many, many years, and just leave it there. And whenever you draw your manual trend lines in, look how often your lazy days lines come in and give you tremendous support and resistance on any chart, whether that be your spot, whether that be your FX option symbols here. So I lay these moving averages, again, they're all exponential, set on the close on my charts, and they become, for me, objective support and resistance levels. Sometimes they behave more like trend lines, but they're all objective support and resistance levels. So now, if I lay my lazy days lines on any chart, you're more or less probably within a couple, with the YUK it's going to be exact because it trades on an exchange, but because when you're looking at spot, within a few pips will be within one another. So it allows me to be fairly confident that we're going to be making decisions based upon the exact same support and resistance levels because they're derived more objectively. And again, you can see all those settings there in the left-hand corner. So let me go ahead here and just pull up an intraday chart. Now, I mentioned earlier, if anyone out there likes trading a more near-term contract, paying for less time, but maybe going closer to the money. So in this case, say an October contract for the YUK, This is a sideways market right here on a 30-minute chart, and it's actually available on the 60-minute too. So this would be a good chart to maybe look at for a near-term breakout or breakdown. Right now, I know the YUK, the dollar yen, has a terrific correlation back to the Dow. You know, what's the Dow doing? Okay, what's the Dow doing? If I'm looking at the Dow, I know that depending upon what happens tonight during the voting, there's a likelihood that the Dow could explode up or sell off. We don't know. And someone had asked me earlier, would I straddle, or would I basically bracket the market? Sure, you could look at a put or a call in this sideways market as the volatility is much quieter. But realize that the previous trend, the current trend of the market, will certainly have an impact on the valuing of the put versus the call. But right here, I would probably be equally comfortable with a put as I would a call. But I will say that with a 200-period simple moving average swooping down here, and I have a lot of good resistance, could I look at the put? You know, a lot of my analysis has me looking more at, and let me overlay the YUK and the dollar yen just so you can see the relationship here. I think it's really important for you traders that are currently focused on spot and are wondering, is this a good way to supplement your Forex trading? And I can't say in so many ways how helpful it is. Let's go ahead and do that here. Okay, so this is the overlay of the YUK and the dollar yen. It shadows it, as you can see here, right? Okay, and as you can do some analysis on the YUK, it's going to pretty much line up perfectly with what you would do on the dollar yen. And so, yes, for me, I'm a little bit more bent towards looking at a put here on the YUK. But if you're comfortable doing a straddle, that's fine. If you're looking at the daily chart, we're below the wave, as you can see here, and we're also below the 200-period simple moving average, which is the bold, thicker blue line. So again, I'm probably more angled at looking at a put here, and I do believe I actually have some puts right now in the YUK. So in the spirit of full disclosure, there you go. So that is the two charts there. And if you want to see their relationship back to the dollar, there's the dollar index and the dollar yen. Okay, and here's the dollar index with the YUK. So I'm overlaying these so you can see that you're probably already on the right path to making some decisions about where you feel the dollar yen's going anyways. And now what you can do is optimize that with utilizing the options. Okay, so thank you for that question. Okay, what other questions do we have here? I don't have my chat window here in front of me, and like I said, I'm a little afraid to click on anything for fear of freezing up again.
Well, J. Paul, and I guess I've been typing J. Paul, but just so everybody else can hear your response. J. Paul wants to know, he mostly likes to swing and position trade, and he doesn't want to lose big chunks of money. You know, I recommended to him maybe spread trading. I think you also said, well, maybe you could just buy an option and know, you have limited risk. Do you want to comment on what J. Paul could be thinking if he's more of a swing and position trader?
Sure. Okay, so, since our talk here is that contrarian versus, that kind of non-contrarian, the contrarian to me, let's just define the kind of entries I'm looking at. If I'm looking at a contrarian, I'm probably looking at trying to capitalize on a little bit of top and bottom fishing with a very powerful way to capture volatility, not pay for a lot of it, and still put myself in a position that I would not be comfortable with the spot. If I'm looking at a breakout or breakdown, we talked about examples there. Now, what about for those of you that are trend traders or swing traders? I define trend trading as swing trading, where you're identifying a underlying trend, and then you're looking to enter on the correction within the context of that trend. So as long as the trend is intact in the up direction, you're content buying those pullbacks. Or if the trend is heading down, you're content shorting those bounces. So are we on the same Paul there, J. Paul? Same page there?
Yep. I think that sounds right.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.